And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Thursday, September the 2nd. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to be looking for accurate context, practicing good risk management, and always having infinite patience. Hopefully, if you're in the markets this morning, they're going your way. It's one of those mornings where sometimes there's like a morning where I'm really excited. There's something new to show you, something that we don't see that often that I get to point out to you. And unfortunately, today is not one of those days. Doesn't mean there's not some decent opportunity. Starting with the economic numbers this morning, the jobless claims numbers came out, a new pandemic low. So there's some good signs there, kind of opposite of what the ADP was saying yesterday. We have international trade balance has dropped to negative 70.1 billion, so a pretty good drop in the trade balance numbers, and we are still waiting for the nat gas numbers to come out at 9:30 Central this morning. So U.S. equities are higher overnight, and after the numbers that came out this morning, of course, that ADP weakness was probably assuring that the any speeding up of tightening of monetary policy is probably off the table. We have tomorrow to contend with as well, as far as the unemployment numbers are concerned, which is, by the way, what traders are looking for. The mother of all employment reports on Friday. Equity futures in rollover today, so currencies in rollover today. We have to remember that because it may tend to have a muting effect on the markets as our longer time frame traders look to roll over. Directional activity is a little bit less. We are holding at all-time highs. We just got some good news this morning. Anything can and will happen. We're going to see that in the charts very shortly. Crude prices have dealt with a drop in inventory yesterday, minus 7.1 million barrels on stock here in the U.S., and also kind of wrestling with the fact that the OPEC Plus is going to be maintaining or sustaining their production increases for the time being. So some conflicting information. Crude oil really kind of taking a look and maybe pulling out, breaking out of a bull flag that we're going to be checking out very shortly. As always, make sure you you hit the like button, share, comment, question, feedback, and heckling are always welcome, of course. And subscribe to our YouTube channel so you can get notifications when we do go live. Great group coaching session yesterday. Thanks for all the questions, Fred, and everybody else who were involved. And again, if I didn't make it to your question yesterday, I do apologize. I'm going to work on being able to accomplish more with the number of questions that are coming in. It seems a lot more folks are coming in, and we will be trying to answer all those questions. Next week on Tuesday, we're starting Futures 101. I'll be sending out the link probably tomorrow morning. Look for it on the social media as well as in, I think, the weekly kickoff on Sunday. Looking forward to starting those classes, kind of basic classes for more for newbies than for experts, but I always enjoy presenting them, and of course question and answer sessions afterwards. VIX this morning down just a little bit, 15.95. Of course, equities are holding at all-time highs. VIX is going to be low. Dollar index 92.48, and the 10-year yield holding right around that 1.3 level at 1.29%. Got to say good morning to everybody as always. Ed Nelson's first one in the room. You win the prize. George, Bill, Brett, Janus, Tone, Charles, Caesar, Andre, stacking bananas. Good morning. I love the gorillas. Brian, good morning. Rob T, Clarence, good morning. Steve Lee, Zoraine, Vince, NM, sup, ladies. Greg H, good morning. Laura, good morning. You, Henry, good morning. Or Harry, I should say. Jason, John, stacking bananas. Finally got my premium funded account. Let's go. Take it easy. Take it easy. Take your time. Stick with the process that got you to your funded account. Now's not the time to change everything. Now's the time to stay in process. Frankie, trying at step 1 today. Lost my funded account recently, unfortunately. Sorry about that, Frankie. But it is a process. We've had traders come back a bunch of times before really finding any tread in the funded account. We're sure looking for your success. Fred, thank you for the questions. I just love the questions. I love the context you put into the questions, and I hope that I give you some really good ideas and some really good answers to those questions. Yes, you'll be back again soon, Frankie. PD Legend, good morning. Michael H. Vlad, good morning. Yes, careful shorting when VIX is low, absolutely. Prophet Eon, good to see you. Rob S. and Wen. If this is your first trip to the market forecast, we are glad that you're here, hoping to find some sort of context or some sort of level that might help you make some money today. James, good morning. Starting step 2 today, congratulations. It's going to be a little bit of a different feel every time we get closer to where we want to go. There's a little bit more challenge in our decision-making process. So just take your time. Sometimes it takes a day or two to get your head wrapped around where you're at, and then get started. Good morning, Aland. Again, if this is your first step to the market profile or market forecast, glad you're here. As always, let's start looking at the context of these markets and see what we can see for us today. We should have Dan back for the recap today, I'm hoping. I know he's been missing you, and I know you've been missing him. So let's take a look into the charts. Starting, as always, with the daily in crude, just going from left to right, no particular order. Everybody knows the rules. One bite each. Crude. Structure overall remains lower. We're seeing lower highs. We're seeing lower lows. We are at risk of breaking that structure, excuse me, here very soon. We are struggling at resistance. We've started a little bit of a bull flag here, and we're breaking out of that bull flag right now. Our next stumbling block should be weekly kickoff high, which is 69.80. We were wrestling yesterday with last week's weekly kickoff level of 69 bucks, 69.10, whatever it was, 68.90, I think is what it was. And then we've got last week's high, also a point of contention for us this week. We had some higher volume yesterday. We had an increase in open interest of 18,000 on a down day. And if that is true, then we've got a whole bunch of shorts that might start to get a little bit nervous the closer we get to this weekly kickoff high of 69.80. Typically when we see higher volume and higher open interest in a directional move, it tells us that the market is more likely to head in that direction. In this opposite move here, in this bull flag, it's probably trapping some new shorts into this market, and they're getting squeezed right now. Take a look at the 30. So when we were looking at this yesterday, maybe there is something kind of cool. Excuse me. We were looking at this as a triangle formation. We broke out to the downside from this triangle formation. We put in this low here, but we did not sustain price down below this trend line. As a matter of fact, we closed back above it. 68.59 was that level. Now, overnight, we got a little bit short here. We've opened now with a gap to the upside through the upside trend line of this triangle, now looking like we're breaking out what turned out to be a potential bull flag. There's some muscle behind this because, again, yesterday we had overall a down day, added a whole bunch of volume and open interest, perhaps trapping some shorts down in this hole here. We're likely to see a trade all the way to 69.80 if that is the case. Again, we've opened with a gap. When we open with a gap and can't close the gap, we trade in the direction of the gap, which would have us looking higher. Looks like our opening range is the low of the session. That's also something that's going to keep me from looking for shorts until I can find some sort of structure with which to lean on. So we do have something cool going on here. Looks like we are breaking out of what ended up looking like a bull flag to the upside. Again, without some sort of structure, without a true test of weekly kickoff high, I'm not looking for shorts at any time here. What's it look like above that level on the daily chart? Okay, we take out this weekly kickoff high. There's tons of space above for this market to rally. So we've got a very important inflection level here, that 69.80 weekly kickoff high. Should be a kind of playing out to be an interesting day in crude oil, which is good, giving us some opportunity. The S&Ps rollover. Can't forget about rollover. Whoops. Just messed up last week's high here. There it is. All right. So we are in rollover. That's going to tend to make the market more range bound. And that is, when we look at what's happened today, in large part, we've fallen into range bound activity. We are, I would say, in day 3 of the range. We've been testing weekly kickoff high. The last couple of sessions haven't tested it today. We added 16,000 in open interest up against the high here. We're still holding an extended trading hour all-time high from Tuesday here. We have yet to take that out. Volume was not that great yesterday. See if we can make this a little bigger so it looks a little more to size here. What is this? No, I don't want that. All right. So volume wasn't great. What the heck is going on here? Volume wasn't that great. Open interest, we did add 16,000 on an attempted move to the upside that did not necessarily hold. Take a look at the 30 minutes and see what we can see here. All right. Maybe a little bit of a streaming issue, it looks like, maybe. All right. So here's our kind of range. Here's our extended trading hour all-time high. Range bound, largely range bound, largely range bound. 16,000 additional contracts yesterday. The market really tried to labor to move to the upside for the better part of the day yesterday, resolving back to the downside. 45.21 and a quarter is settlement. We've got some overnight longs here. Looks like we're going to be opening perhaps in range, but with some pretty substantial overnight longs here. Anything up here until we can break out above this weekly kickoff level is primed for finding some fish to the short side, especially knowing that we have some overnight longs here. And if we can't open with a gap, it's going to be a bigger probability of those overnight longs getting a little bit nervous and offering us a better trade location if we're looking to buy weaknesses, which I think we should be still. And again, it's in rollover, and we are awaiting important information tomorrow in the form of the unemployment numbers. We've had some conflicting numbers this week between the ADP and the jobless claims. Tomorrow's going to be the biggie. It wouldn't surprise me at all if our equity markets and other markets stay relatively range bound today, particularly because they are in rollover. So that, again, takes some of the directional activity or probability away from the marketplace. So you look at the NASDAQ. NASDAQ eked out an all-time high yesterday. Very, very close to that weekly kickoff high. We had an overlapping to higher range, and we added 2,500 in open interest to the NASDAQ yesterday. The volume wasn't that bad in the NASDAQ. It was not that great in the S&Ps. And again, we did add 2,500 on an overlapping to higher day. It just looks indecisive. We've got a couple of, doji candles here that indicate, the market is testing on both sides and looking for its coming direction. But again, it is also in rollover. That open interest still looks healthy for the upside auction. Just the way this market is presenting itself still looks stronger than the S&Ps. But again, it's rollover, so we have to take everything we see in volume and open interest with a grain of salt till rollover is over in about a week, maybe a week and a half. So the 30-minute chart has us looking at a similar situation, except we did take out the previous extended trading hour all-time high in the regular trading hour session, and that was pretty much it. That was it for our upside. We consolidated. The market fell apart late in the day, and we put in settlement down here at 15,609 and a quarter. It pretty much supported price all night last night till the London session opened up, and we got some buyers coming in, bringing price back into value. Very little chance of a gap today in the Nasdaq, unlike the S&Ps. We're very close to perhaps opening with a gap. Centrally located in yesterday's range, inside value. One of the first things that we're going to be looking at today is, are we going to take care of old business? Old business meaning these overnight longs. If we can't bring price back down to settlement, then we may see this market either range inside of value or continue to try and push to the upside, as equities tend to do when there's no bad news. All the news is out. We're waiting for news tomorrow. We're in rollover. I'm, again, not expecting fabulous big opportunities. Does not mean that there are not good opportunities in these markets today. Just be patient and let the market come to you. And in the gold, this market has just been a little cantankerous, if you ask me. It's volume and open interest yesterday lower, lost 1,500 on an indecisive day. Volume was lower. But when we look at this chart, I mean, it's been putting in higher lows and higher highs. I'm going to call this relatively short time frame for this to kind of be establishing itself. But we've got, a bear flag, then another bear flag just on top of that, and then another bear flag just on top of that. So we'll be watching the high end of this channel today for potential breakouts or failures. It's giving us opportunities already here in that regard so far today. So there's room for this market to push to the upside to weekly kickoff high, which is currently 1838. There is room for this market to rotate all the way back down to this trend line, which is basically I'm calling it the trend line that was the top of this bull flag to the bottom of this bull flag. The market is just stair-stepping higher. And if that continues, it should give us some pretty stable ideas and decent trade levels to limit risk when we have the opportunity to see price at those levels. Well, are we going to see price at those levels? Well, Hang on. Whoa. Here's the 30. I'm looking at the stab above this level yesterday as a rejection. Maybe something we would want to look at is taking this trend line back up to this level. But it was a rejection, so I'm going to kind of be looking at, this kind of iffy as to where this trend line might be. So I'm going to probably be focusing more on the information from the last 3 sessions for gold. We've got the zone here, 1807, 1809, which has been supportive. We really looked through it, but there was not one 30-minute bar that closed back down below that 1809 level. The market is largely in balance in an overnight session, maybe a little bit short now because we're holding below settlement, but settlement is 1816 even. We opened in range, we opened in value. We have not extended yesterday's regular trading hour range at all. The market is largely in balance, and I'm going to try and stay patient and wait for good opportunities. Watch for good opportunities. No overnight no overnight inventory. No gaps. Range bound equals patience to me. Let's take a look now at the euro. Okay, euro is certainly continuing its one time framing activity much better than gold is. It is also in rollover. We have to remember that 3 days wrestling with weekly kickoff high. We're really starting to maybe find some acceptance above that level here. Low volume and open interest. We lost 8,400 in open interest, and again, because it's rollover, there may be more to that story. It may not be as bad of a loss in open interest in the front couple of months as it looks like. Although the volume and open interest, if there was not volume, would be considered unhealthy for the upside short time frame trend that we've got going here. 30-minute chart. Here's yesterday. Here's our loss of 8,400 in open interest. Again, possibly a function of rollover. The market closed finally above that weekly kickoff high of, what was that, 118.46. It's opened above it. It's opened in range and in value. And again, I said at the beginning of this is one of those days when I'm usually very excited to show you something new and exciting. This is not one of those days. This is one of those days where I think it's going to be really important to stay extra patient and wait for the market to come and offer opportunities to you. Going to find them. You're going to find them, but I don't think there's going to be that many opportunities, but the opportunities we're going to have are going to be worthwhile waiting for. And for the 10-year, still largely short time frame controlled. It's the 4th day in balance. Last week's high is just above us. It just doesn't look like this market is ready for anything big to happen. I think it's kind of in a holding pattern, waiting for what the Fed is going to do as far as buyback slowdowns and rates as we get closer and closer to the end of the year. So, I mentioned yesterday that the market is largely on my back burner. And what we did yesterday was we just got too short. The market opened. We unraveled those shorts and brought the market basically right back to the exact same range as yesterday. This morning, settlement, 133.14.5 ticks. The market opening, getting a little bit long here. Are we going to see a pull back towards settlement for an inventory adjustment. There's no gap. No reason to be thinking about gap rules. Again, try and stay patient in this market. Not seeing great opportunity there doesn't mean there isn't opportunity. And I've been wrong before, trust me. Do you think the increase in open interest in crude oil could be new longs? Yeah, it most certainly could. It's not in rollover, so let's take a quick look here. So I see what you're saying. That deep dive to the downside, was it new shorts coming in or was it new longs on the way back up? Whatever it was, it is certainly bringing us an opportunity right up to weekly kickoff high right now. So, if I had my druthers, the way the market is responding to this, I would say that we probably rat holed a few shorts in this market that have them running for the hills above the top of that trend line that turned out to be a bull flag. You don't want bias. Trade what you see. What are we looking at, Fred, here? We're looking at, a market that has been coiling. We have a market that has now presented as a bull flag. And now we have a market that has been breaking out of that bull flag right towards an important inflection level. So what I'm thinking is, all right, well, as long as we maintain price above this level, I'm going to be looking for longs on weaknesses. Is that a bias, or is that just a kind of a technical or profile or fundamental thing that is causing us to trade what we see here? I'm kind of bummed I wasn't available to catch this opening range trade, which I believe is still the low of the session, and to have us take this opportunity up here, because, that's a pretty decent trade. We're talking about 40, 50 ticks here so far if we continue to see momentum and volume building above weekly kickoff high here. We looked at this. There is space above. So, great thoughts. All right, well, we've got a minute and a half before the equity opens, so I'm going to take my deep breath, remind myself to stay humble, grateful, and creative in my trading today. And if Dan's not available, I'll probably see you for the market recap, but I think Dan's going to be with you again today. I know we'll all be glad to see him. I'll be with you tomorrow morning on the market forecast. As always, get out there, profit, trade well today, and I'll see you in the pit.